All right, so I will resume the lecture on national income. Okay, so in last class, if you see, last class, last class we have discussed few things. We have discussed what is GDP, right, and what is GNP. We have also discussed about we have also discussed about uh, national income and related aggregates. Okay, we have discussed about the national income and related aggregates like what is factor cost, okay, and what is market price. Okay, we have discussed the concept of gross versus net. Okay, we have also discussed about the base year. Okay, what is the base year and what is the characteristic feature of the base year. We have also discussed the what conditions are required to meet the criteria of the base year, right? So we have so far discussed that much. Okay, now I will discuss over here. So these things has been discussed in the last class. So today I will discuss here the measurement of national income. I will continue from the previous lecture and I will discuss here the measurement of national income. Okay, that is the topic, measurement of national income. Okay, so I will continue here. Okay, so generally, if you talk about the measurement of national income. Okay, so generally national income is measured in three ways. Okay, generally national income is measured in three ways. First one is called as the income method. Okay, second one is called as the production method, and third one is called as the expenditure method. There are three methods. One is the income method, second one is the production method, and third one is the expenditure method. Okay, fine. But before measuring this national income, there is a concept. There is a concept that is related to this national income, that is called as the circular flow of national income. Okay, circular flow of national income. So first we need to talk before knowing these three methods of calculating the national income. We have to first identify that what is this circular flow of national income. Okay. Okay. So here, if you see, what is the circular flow? I will write here. I will write here that 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 circular flow okay, circular flow of national income is an economic model that describes the continuous cyclical movement of money and goods or services between various sectors of economy. Okay, So I have written here the circular flow of income, national income, is an economic model that describes the continuous cyclical movement of money, goods, and services. Okay, between various sectors of economy. Okay, all right. So generally, if you talk about broadly Indian economy, if you talk about, so generally there are two sectors. One is household, and second one is the firm. Okay, simple one. Okay, circular flow of national income. Very simply, I am defining here. So in the Indian economy, there are two sectors. Okay, two sectors. One is household sectors. Second one is the firms or industries. Okay, so circular flow of national income. What it entails? It entails that, right? It entails that total production that equals to total income, and that equals to total expenditure. So what does this this triology, right? What does this entails? Total production is equals to total income that equals to total expenditure. That means production process, income process, and expenditure process, they are interrelated to each other. Okay, they are interrelated and they are circular. Okay, they are circular in nature. Why circular? Because production is done, right? Production is done, they are circular in nature. Why why because production is done production is done production is done to generate income, and income is spent, right? Income is generally spent to get goods and services. So generally they are interrelated. Okay, they are. So circular flow of income, that means there are cyclical movement of money or goods or services between various sectors of economy. So I told you here there are two sectors, household and firm, right? Household and firms. So it is generally considered in the circular flow of income that total production is equals to total income that equals to total expenditure, right? Income is generated, production is done to generate the income, and income is spent to get the services and goods for the life. Okay, so if you depict the circular flow here, I will write there are two sectors. One is the household sector. One is the household sector. Second one is second one is firm. Okay, second one is firm. So generally there are two sectors of economy, of Indian economy. One is the household sector, and second one is the firm. Okay. So very simple one, very simple, that household household provide household provide factors to firm. Factors. Household provide factor to factors to firms, and 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 firm provides household firm provide household firm provide to household factor income. Okay, in return, factor income in return. Okay, similarly firm provide goods and services to the household, goods and services to household, all right? And household, whatever factor income that has been generated by the household are spent to purchase the goods and services. So that is expenditure on goods and services. So here you can see there are circular flow, right? Household provide factors to the firms, and firms provide factor income to the household. So what are these factors? Factors are generally land, labor, capital, and entrepreneurship. Okay. And what is factor income? Factor income is generally their rent, their wages, their interest, their profit. Okay. All right. So we have seen here there is circular flow between the household and firm to household. All right. So the flow of factors from household to firm and the flow of the goods and services from firm to household, that is called as the real flow. That is called as the real flow. Just a second. Right. That is called as the real flow. Okay. So here the factors flowing from household to firm, and from firm goods and services are flowing from firm to household, that is called as the real flow. And this value, right, this value, okay, that factor income is coming from firm to household, and whatever income is being received by the household, that is being spent on the goods and services produced by the firm, that is called as the money flow. All right. So this factor income flow and expenditure on goods and services, right, these both together come under the money flow concept. First one is real flow. What comes in real flow? Under real flow, I have written here household will provide factors and purchase goods and services. That is, real factors are flowing. Okay. So from household to the factory, that means firm, that is called as the real flow. Okay. And second part is money flow. Okay. Money flow, again here, household will charge rent, wage, interest, and profit while supplying factors. That is called as factor income. Okay. So here real factors are flowing, and in money flow income is flowing. Okay. Again, they use money to buy goods and services, called as expenditure on goods and services. That is called as the expenditure on goods and services. Okay. So here again, whatever income is being generated, that is being spent. Okay, so income and expenditure would be equal over here, right? So money flow here, money flow and real flow. So this process is called as the real flow. And here, this here, the entire both the process, okay, both 1 and 2, that is called as the real flow. Here again, the factor income and expenditure, this one and this one, they are called as the money flow from from household to firm or firm to household. So they are circular in nature. Okay, they are circular in nature. So money is flowing from firm to household, that is called as the factor income. That income is again spent on in buying goods. Okay, so income is flowing. And here if you see the real flow, goods and services factors are provided from household to the firms, and firm in return, they are giving the goods and services. Okay, they are giving the goods and services from firm to firm to household. I hope you understand. Okay, so again I'm saying here that household provide factors, that is labors, land labor. Okay, okay, so again I'm saying here that household provide factors, and in return firm provide factor income. All right, and household will spend that factor income to purchase goods and services. Okay, so in real flow there are factors and goods and services are flowing. And in money flow, factor income, and that particular income is flowing from different entities, right, from the farm to household and household to the farm. So that is called as the money flow, right? I hope you understand. Okay, so I will move ahead. The first one, I already told you, there are three methods. One is the income method, second one is the production method, and third one is the expenditure method. Okay, so I will talk each and every point. So why we have discussed about this circular flow of income from household to the firm and firm to the household. Why? Because whatever production is taking place, that is generating income, and income is spent to buy that particular product or goods and services. So there are circular flow. That is why I try to make you understand that there are circular flow and circular relation between the household and firms. Okay, accordingly we'll see the first uh, method is, that is called as the income method, right? First one is income method. Okay, first one is income method. So what is income method? Income method is that here national income is estimated by adding up incomes of all factors of production. So what is the factors of productions? Factors of productions are generally, they are land, labor, capital, and entrepreneurship. Okay, they are factors of production. So national income can be calculated by just adding up incomes of all factors of production. Okay, so here what we calculate, the first one, we calculate rent. Okay, we calculate that is income, that is a kind of income, right? Similarly, we calculate wages, we calculate interest. Okay, we calculate profit as well here, right? They are also income. All right, we also add mixed income. Okay, generally they are of self-employed people, self-employed people, self-employed people here, that means those people who are not working in a particular firm. Okay, so their incomes are also calculated. Why it is important? Why? Because they are generally in majority in number, generally 52% of population. 52% of population generally they are self-employed, right? Okay, so here I will calculate national income is equals to national income, national income here. So whatever we get here, we get from here, whatever we add over here. Okay, whatever we add over here, that is that we get the value of, we get the value of domestic, the this is called as the domestic income, domestic income. Okay, domestic income. And domestic income is what? NDP at factor cost, because we are calculating by adding up all the factors of production. So it is NDP at factor cost. Okay, NDP at factor cost we get, generally we get here. Okay, so, and I already told you that national income is generally what? National income is an NP at factor cost. So what we have to do? We have to do for to calculate national income, we have to add, right, domestic income, what we have got here, plus net factor income abroad, right? Only then we get the value of national income. So by adding up all these, we get NDP at factor cost, that is called as the domestic income. And when we add net factor income abroad, we get the national income, right? We get value of national income, value of national income. I hope you understand. Okay, so that is the first method, that is the first method. Okay, second method is, that is the first method we have completed. Second method if you talk about, second method is second method is second method is production method, right? Second method is production method. Okay, so production method is also called as the value added method. Production method is also called as the value added method. Okay, so here what we do, that national income is estimated by adding up value addition value addition value addition of all firms. Okay, value addition of all firms, that means value addition of all firms. So generally there is raw material. Okay, generally there is raw material. Okay, on raw material we add certain values. Okay, and then product is ready. Okay, so you need to remember here, okay, values means value addition. Okay, we are done on raw material. For example, you are preparing or manufacturing a shoe, right? So there rubber is a raw material for preparing or manufacturing a shoe, right? जूते बनाने के लिए आपको रबर की जरूरत पड़ सकती है, but that will be considered as a raw material. And I already told you that raw material is not included in national income. Okay, only value addition, whatever we have done with the rubber by adding different things, okay, that will be counted only in the national income, that you have to remember. So for example I am giving illustration. For example, raw material, right? Raw material, the cost of raw material is 5. Okay, and we are giving certain factor input. I already told you, land labor, no, land labor. Here again, value addition means what we are doing: land, labor, okay, and entrepreneurship. Land, labor, entrepreneurship, and capital. Okay, that is the value addition. So here, suppose raw material cost is 5 rupees, factor input 5 rupees here, factor input that we are providing of costing 15 rupees, and whatever depreciation in a machine, okay, after generating that particular product, that is costing 1 rupees. And after generating the product, if it comes in the market, right, if it comes in the market, a tax will be imposed. Suppose tax is 4 rupees. Okay, fine. So now that product will be costing 25 rupees. Okay, so if you talk about the value addition, the value addition part is only this one. Okay, value addition part is only this one, that is costing around 20 rupees. 20 rupees over here. This is the raw material that is not included. I already told you. Okay, so price should be of 25 rupees of that particular product. Value addition is only 20 rupees. So only this much will be costing. Only this much will be added in the national income. Okay. Okay. So here I'm writing in production method what we do. What we do in production method. Production method, what we do. We calculate the value added. We calculate the value added. How do we calculate the value added? We calculate the value added by subtracting value of output minus value of input, which is of non-factor in nature. That means raw material. Okay, so here if you calculate the value of output, okay, that is totally 25 rupees, and value of input costing around 5 rupees. Okay, not raw material. So total value would be 20 rupees. So either you calculate in this way, you exclude the raw material cost, or you just subtract it from the value of total output. All right. So here 20 rupees would be 20 rupees would be the value addition. Okay, value addition, and this is the part of this is the GDP. Okay, so for that particular product, GDP at MP. Okay, that means GDP means total value of that particular product. Since net indirect taxes has been added, so that will be 20 rupees. Okay, GDP MP would be the 20 rupees. Okay, so in product method, we also uh, we also call it as value addition means, right? Value addition means VA, right? So in production method, we also call it as GVA. We also call it as GVA, gross value addition. We can say, okay, gross value addition at market price. It is 20 rupees. So either you call it GDPMP or you can call it GVAMP. Why? Because under the production method, we only extract the value of value added. Okay, so both are same. GDPMP or GVAMP at the rate of market prices. Why? Because net indirect taxes are involved. You can call it as gross value addition. Okay, both are same. So for a particular product, both are same, but you sum up. Okay, so GDP is equals to sum of all the gross value addition across all the product. So GDP at national level, okay, it is sum of all the products produced in the country. Okay, it is all the products or all the products of industries produced by a nation in a particular year. Okay, so both are almost same, that you have to remember. Okay, so now we have received the value of GDPMP and our GVAMP. Okay, so how we calculate national income from here? That is the question. Okay, why? Because national income is NNP at factor cost, and we have received the value of GDP at MP. Okay, so we can extract over here. We can remove the depreciation. We can subtract the depreciation value. We can add net factor income abroad, and we can also remove or subtract the net indirect taxes, and we will get national income at NNP at factor cost. Okay, we can get the national income. So how do we calculate? Okay, so we have received here GDP at MP equals to 20 rupees. We have to remove the depreciation. Okay, so it will be -1. We have to remove the depreciation. We have to add the net factor income abroad. Okay, for closed economy it is generally 0, and we have to remove the net indirect taxes as well. That is also of 4 rupees. So total national income would be 15 rupees again. Okay, so either all right, here. Okay, so here I have calculated, okay, through income method or production method. Okay, production method or value addition method. Just a second. Okay, so this is not national income, this is the value addition, right? I just want to correct. This is the value addition part. Value addition. Okay, this is not the national income. You have to keep in your mind. Okay, this is the value addition. So value addition, either you collect in this way, or value added you collect by subtracting the value of input from the value of output. Okay, so that is the value addition. And value addition generally represented by GDP or MP or GVA at MP. Okay, and through this data we can calculate the national income by subtracting depreciation and net indirect taxes. Okay, depreciation and net indirect taxes, and by adding net factor income abroad. So that was the second method. Okay, that was the second method. So production method we have discussed income method. Third part would be expenditure method, right? Third, we have to discuss the expenditure method. Okay. So again, what is expenditure method then? What is expenditure method? Expenditure method here, national income is estimated. National income is estimated by adding up expenditure on all final goods and services. Okay. So I already told you that all three methods are circular in nature. I also told you the circular flow of economy. Right. So there are two factors. There are two contributors. One is the firm, and another one is the household. Household provide factors, and firm will provide the income, and that income will be spent. Okay, that income will be spent by the household, and that expenditure is generally calculated by the expenditure method. Okay, that income is generally calculated by the expenditure method. So there is there is one assumption over here. What is assumption? What is assumption? While calculating the expenditure method, national income through the expenditure method, there is an assumption. Okay, there is assumption that the products we produce the products we produce in country are either consumed, invested, exported, or go in stock. Okay, there is assumption that whatever products that we are producing, that is, they are generally consumed in either ways. Okay, in either ways. So here we have one formula that is y equals to c plus I plus g x minus m. Okay, there is a formula. Y is national income through the expenditure method. C here means private. Private here, if I tell you what is private is generally household. Okay, household people are called as a private final consumption expenditure. Okay, so whatever expenditure is done by the household, that is called as the PFCE, private final consumption expenditure. Okay, all right. Similarly, what G entails? G entails over here the government final consumption expenditure. Okay, that is called as the GFC. Okay, so this is done by the household, and this expenditure is done by the government. G. Okay, so B sum of the expenditure either done by the private entity or by the government entity. Okay, I already told you that invested amount is also calculated in the national income. Okay, so investment can be also done by both household or by the government. Okay, both can do the investment. So here I will write here expenditure on capital goods. Capital goods means machines. Okay, or capital formation or investment. Okay, or investment. So both household and government people, they can invest, right? And what about X minus M? X minus M means export minus import. Okay, that means net export. Whatever we export and we spend money, we spend money in importing, and we get money by exporting. So whatever money we receive, that is also counted in expenditure method. Whatever money we spend, that is also counted in the expenditure method. Okay, I hope you understand. Okay, so that is the thing. Okay, so there are three methods. I told you there are three methods. There are three methods. So first one is income method. Income method. Second one is production method or value added method, and third one is expenditure method. Okay, so the money value of all these three methods are equal. Generally, when you calculate three methods, the money value will be equal. Okay, and that is what it entails about the circular flow. It entails about nothing but circular flow. Okay, circular flow. I have already told you what does circular flow mean. Okay, so whatever production is done by the household. Okay, so production is done to generate what? Income. Here income is spent income is spent to buy good and services. Okay, and that expenditure comes over here. So these three things are interrelated to one and each other. Okay, to one and each other. So that is the thing that you have to remember. Okay, next thing. So there are three methods I have discussed. Okay, so first income, second production method. Okay, third expenditure method. All right. Here I will write one note here. I will write one note. That means, okay, economic survey data, economic survey 2025-26 reveals that private, right, पीएफसी पीएफसी हमने यहाँ पे बताया आपको, पीएफसी प्राइवेट फाइनल कंजम्पशन एक्सपेंडिचर, पीएफसी. ऑलराइट, पीएफसी के बारे में है ना. As per the economic survey 2025-26 reveals that 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 share of PFCE, private final consumption expenditure, in GDP rose to 61.5% in financial year 2026. Okay, in 2026. That means it is highest level since financial year 12. यानी 2012 के बाद से इतना प्राइवेट फाइनल कंजप्शन एक्सपेंडिचर, यानी कि हाउस होल्ड ने इतना स्पेंड कभी नहीं किया था, जितना कि 61.5% ऑफ जीडीपी इन्होंने खर्च किया है. ठीक है, इसका मतलब क्या है, सिग्निफिकेंस क्या है इसका, व्हाट इज द सिग्निफिकेंस. सिग्निफिकेंस का मतलब ये हुआ, अगर हाउस होल्ड नो इफ दे आर spending the money up to this percent, that means the households are confidence in economy has increased, and that confidence increment is supportive of supportive of macroeconomic macroeconomic strength. Okay, I hope you understand. So this year economic survey 2025-26 reveals the share of PFC has gone high, and uh, that is why it is supportive of macroeconomic strength. Because why? Because the household confidence in the Indian economy has increased. Okay, has increased. Okay. All right. So here, here one reasoning. That there is one reasoning that that why there are why there are three methods. Why not only one method? Okay, to calculate national income. Okay, why there are three methods to calculate national income? Why not one? Okay, so I have demarcated a margin so that what topic we are discussing, that will be clear for you. Okay, so we have discussed so far this much. So here again we have a discussion over here as to why there are three methods to calculate national income. Okay, why why it is so? It is so because it is so because sector types, okay, sector type data or sector specific data is necessary, okay, to calculate national income. So what does it mean? Okay, what does it mean? That means कि whatever income is person is getting, that cannot be revealed by the goods and services. Okay, good production. Okay, goods or services, goods production. So whatever income a employee, suppose this is employee, is great. So whatever income a employee is getting, that cannot be revealed by the whatever amount the good whatever amount has been invested in the manufacturing of a good. That means suppose employees income can be generated or identified or calculated by the income method, whereas the good production, right, or services taken, whatever income is generated through the manufacturing of good, that can be identified or calculated through the production method. Okay, so production method or value added method, production method or value added method. Okay, that means sectoral type specificity create condition to calculate the national income through the three methods. Okay, three methods. Again I'm writing here, according to MOSPI, Ministry of Statistics and Program Implementation, all the three methods are circular in nature. All the three methods are circular in nature. Okay, because things are produced for income and one's income is others expenditure. ओके, तो इन्होंने बताया all the three methods are circular in nature. That means by identifying one, you can identify the second one. Right? I already told you. They are circular in nature. Okay, they are circular in nature. Because why? Because economy itself shows circularity. Okay. Okay. So here sector type or specific data is necessary. I told you, right? It is so because sector type data or sector specific data is necessary to calculate national income. Okay. So what are those sectors? What are those sectors they are talking about here? All right. So next topic or next discussion, we will make about the classification of the classification of okay, the classification of economic sectors. Okay, through which the national income is calculated. Okay, we'll discuss here. So here generally there are three sectors which is generally just a second. There are three sectors. The first one is agriculture one. Second one is industry, and third one is services. Okay, I hope you understand. Okay, so for agriculture and industry, okay, for agriculture, if you say so, agriculture and allied activities. Okay, second, industry. Within the industry there are several other sectors as well. There are subcategorization of the sectors. In industry, within industry there are mining there are mining and quarrying, manufacturing, electricity, gas and water supply, and then construction. Okay, there are four subcategorization. Within the services, again there are subcategorization. The first one is transport, communication, okay, communication and trade. Second one is finance or consultancy services. Next, public administration. Okay, public administration services. All right. Okay, allied activities, it comprises of animal husbandry, fisheries, forestry, etc. Okay, so there are different sectors of economy, right? There are the different sectors of economy. Okay, so if you talk about the agriculture and this one up to the electricity, gas and water supply. Okay, this part here, right? This part, it is okay. So national income is calculated through national income is calculated through production method. Okay, national income is calculated through production method. Okay, I hope you understand. Okay, services, if you talk about the services कैलकुलेशन इनका कैलकुलेशन हम करते हैं इनकम मेथड से. ओके, इनकम मेथड से हम कैलकुलेशन कर सकते हैं. व्हाई? बिकॉज डॉक्टर्स, इंजीनियर्स, ओके, or educators who are providing services, they are not producing goods. Okay, and that is why production method is irrelevant. Production method is irrelevant in this sector. Similarly, for construction activities, for construction activities, for construction activities here, construction activities, we use expenditure method. Okay, we use expenditure method to calculate national income. We use expenditure method over here to calculate national income. So I hope you understand. Okay, I hope you understand. Okay, so this is generally we divide economic sectors into three sectors: agricultural activity and allied activities, industry, services. Okay, that is the thing. So in these ways, okay, we use production method for agriculture allied activities and majority of the industrial sector. We use income method for services sector, all right, and we also use uh, this expenditure method for the construction activities. Okay, so these are the things. Okay, all right. So basically, if you talk about here, I will write note here. So in developed economies, in developed economies, okay, services are dominated. Services are dominated, and we use, for services we use income method. Okay, so income method are generally preferred over developed economies. Okay, in India we use all three methods. We use all three methods. Okay, so I will make it little bit complicated over here. I will make it little complicated. Okay, so we also divide these sectors into three other sectors. Okay, in the general terms, we divide these sectors into the first one is primary sector. Okay, primary sector, secondary sector, secondary sector. Okay, third tertiary sector, and fourth quaternary sector. Okay, within quaternary there is one sector that is called as the quinary sector also. Okay, so what primary sector includes? Primary sector includes, बच्चों, the primary sector includes the agricultural activities, total agricultural activities. Just a second. Okay, it includes the agricultural and allied activities. It includes this part, mining and quarrying as well. Okay, this includes the mining and quarrying as well. So it includes these parts. Okay, primary sector includes the agriculture and allied activities along with the mining and quarries. Okay, what does secondary sector includes then? Secondary sector includes these manufacturing, electricity and gas. Here. Okay, here this secondary sector includes manufacturing, electricity and gas and water supply, construction activities. And what tertiary sector includes? Tertiary sectors, tertiary sector includes all the services. Okay, all the services. Yeah. Okay, I hope you understand. So they are interchangeably used. Okay, these terms are interchangeably used. So agricultural and allied activities can also be called as the primary sectors. Manufacturing, majority, because majority they are in secondary sectors, so they are called as the secondary sectors. And services overall under comes under the category of services. All right, quaternary sector is a sector where what is happening here in quaternary sector, what comes, this is research and development activities are done here. Okay, so why do they do are they also being counted in the national income? We'll say no, no, not counted in national income. Why? Because data is not available. Okay, data is not available for the quaternary sector, that is high class research and development activities. Okay, so within the quaternary sector I told you there is quinary sector. So what is quinary sector? Quinary sector, it includes high level of decision making, high level of decision making in society or in economy. Okay, okay, examples are top executive. Okay, top executives, officials in government. Okay, or science field, or universities, or healthcare facilities. Okay, healthcare. So they are the top executive, they are making decisions. So they will come under the quinary sectors, that you have to understand. Okay, that you have to understand. Okay,